Has Disney stock bottom? Is it time to buy the dip in the Walt Disney Company? Talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. It is time to talk about the Walt Disney Company. I get a ton of comments on my channel and my Disney videos. Is it time to buy the dip on Walt Disney Company? Now, I think a lot of that centers around the fact that this company is really near a 52-week low of $142 per share. Right now, shares are trading closer to about $149 per share. The stock is down year to date 17%, which makes it a big lagger when you look at other stocks in the stock market. Now, we'll take a look at this from a technical perspective as well. Holy moly, we might be setting up for a reversal. We'll talk about that from a technical perspective as well. We'll go through some of the most recent headlines as well. There's been some headlines that has moved Disney stock. We'll talk about those more broadly. Then I really want to get into focusing on Disneyland because I think that is the key for this stock to really turn around and really signal that this stock has bottomed and it's ready for a reversal. So we got to talk about that as well. Now, very first thing, we'll get into some of the most recent headlines. Now, ad-supported streaming services like Roku and others out there that do have ad-supported models, they are taking streaming share from more traditional subscription or ad-free services such as Disney Plus and Netflix. Now, what I would say about Disney in the case of this is a company that does have a Hulu offering that is ad-supported. They have other ad-supported offerings as well. They also have low-cost subscription offerings like ESPN Plus that also serve ads against that content. Disney is going to be able to thrive and survive either way the streaming wars tend to go. Whereas Netflix would really have to adjust, in my opinion, since they don't have an ad-supported model. They would really have to build up that business, build up those relationships. I don't think it would take that company very long, but if consumers start shifting away from a monthly fee and they prefer an ad-supported model, Disney, in my opinion, is very well positioned to take care of that. Now, Disney is, quote, significantly undervalued. This is according to a KeyBank analyst that sees 40% upside in the shares. They up their price target to $216 per share. I'll remind you, the shares are closer to $150. He sees revenue growth at about 15% annually and operating income growing at 36% annually as well. That likely factors in full reopening and full capacity, or at least relatively full capacity at the parks division, which we'll talk about more here in a second. Now, more on the TV side, Disney declined recently as YouTube TV threatened to pull ABC, ESPN, and other Disney-owned channels in a carriage fight. Now, this is not untypical. Disney is constantly battling with DirecTVs and the YouTubes out there that carry ABC, ESPN, and other products that they offer. What I thought was interesting is the price of YouTube TV would actually go from $64.99 down to $49.99 on December 17th if these two can't work out a deal. But like I said, this is typical in this business. It is very typical with Disney as well. They both play hardball up until the deadline, and my guess is YouTube and Disney will work out some kind of deal here. I don't think that has any real longer term impact on the stock. I think if you are going to want to buy Disney on the dip, what you need to come back and come back big is Disneyland. Now, I want to note on our most recent earnings video, here's our year-ended results over at Disney. So we've got Disney Parks and Experiences. This is essentially Disneyland right here. Notice the company did $16.5 billion worth of revenue. The year before, in 2020, they did $17 billion. So we actually saw a relatively small decline in revenue year over year. But here's what I want to point out. Okay, this is obviously 2020 and 2021 is obviously on the backdrop of the health situation that we've been involved in. I want to rewind time a little bit. Take a look at 2018 and 2019. Will we ever get back to those days where things are, quote, normal and people feel comfortable going to these parks and having that experience with their family? I don't know. I don't know if I can confidently answer that question. I think we're all hopeful for that. And let's just assume those days come and they come soon. Take a look at this, okay? In 2019, when, again, everything was, quote, all normal, right? Here's Parks and Experiences, Disneyland. Look at the revenue it generated. $26 billion. I want to remind you that in the most recent fiscal year, we did just $16 billion worth of revenue. So that is $10 billion more in revenue that Disney did on the park segment of their business in a more normalized environment. Take a look at when it was at 2018. We were sitting at $24 billion. Now let's take a look at it from the segment operating income. Back in 2019, this company did $6.7 billion worth of operating income just on Disneyland. Look where it was last 2 years. Only $471 million and $455 million respectively. This segment of Disney has absolutely been obliterated by the situation that we're in. So if you're bullish on the outcome of this becoming more normalized, becoming better, getting better, well, I tell you what, I don't know if there's much better play in the stock market when we're talking about over $10 billion worth of income that's likely to come in on the revenue side, and we're talking over $6 billion worth of operating profits that could come back to this company if the segment of Disneyland gets back to quote normal, or at least gets back to 2018 and 2019 levels. Take a look at this. This company, for their entire operations, this is ABC, Disneyland, ESPN, everything that Disney did. In 2021, this company earned just $7.7 billion worth of operating income. And I just want to remind you that in 2019, the company did nearly that just on Disneyland. Take a look at our total operating income of over $14 billion. This company's operating income has absolutely been slashed in half over the last year, primarily due to the health situation that we're involved in. Now, what I did brought up here was Orange County. I know there's lots of headlines on this. I am not a doctor. I don't want to try to predict the trends of these types of things, but I just want to stretch this out broadly to show you where we're at. Now, out here in California, there's state regulations, there's county regulations as well. Disneyland is located in Orange County, which tends to have slightly more lenient policies. When you go a little bit further south, down into LA County, they're requiring all types of documentation and other types of things in order to visit venues similar to Disneyland. So for the most part, things, in my opinion, are looking pretty good right here. And if we can continue to follow this trend over the last year or so, things look like they're moving in the right direction. And if we all cross our fingers, that will be definitely good for Disney in terms of their revenue and their profits in that Disneyland segment, which I'll remind you, absolutely have been disintegrated over the last year. We were doing well north of $6 billion worth of operating income in a normalized environment. Now we're doing less than 500 million. It just shows you how much this company can come back if that segment of the business can get back to normal. Now, what I do want to look forward on the earnings per share segment of the business, analysts are suggesting that this coming year, they'll do about $4.09 on that EPS side. And next year in 2023, they'll do $5.64. And by 2024, they'll jump up to $7.09. Now, what you might be wondering is, where was this company back in 2018 and 2019? Well, this company in 2018 did $8.36 on EPS. That is not even close to what they're estimating over the next year. And in 2019, this company did $6.64 per share on that EPS side. Analysts aren't expecting it to get above that until 2024. So you have some major upside in Disney stock if this comeback can be accelerated to a certain degree over the next 12 months, because analysts, like I said, are not expecting these 2018 and 2019 numbers to come back really until 2023 and even 2024 for Disney. And certainly if we start projecting out that distance, where will their media networks be? Where will the direct-to-consumer offering with Disney Plus be as well from an operating profit? This company is well positioned, especially if that Disneyland and parks and experience segment of the business really gets back to full strength. We'll see if that can materialize. Now, we talked about on our last video that we did on Disney, this company was hanging out on a major level support right here at about $168 per share. After reporting earnings, it gapped down, and I talked about on our video, we were very concerned about this major gap that we were starting to fill here. And I even left this arrow here. This arrow, I didn't put it on before I recorded this video. I'll put a link in the description below to the Walt Disney video that I recorded just several weeks ago. And we talked about how we're anticipating this gap to fill. And so it did fill. We see here on the most current price action of this stock, we've filled and we have been falling precipitously on this stock all the way down to about $141 per share, or essentially the 52-week low. But what I've noticed is we do see a sign, and it's a very small sign, but we are seeing now a small sign of a reversal. And this is a good time, in my opinion, to start thinking about buying the dip on stocks like this, because when you make a low and now you're in the midst of making a higher low, that can be, it's not always, but it can be a sign that the stock is starting to reverse. So this is personally how I would play this stock if I were going to step in on this one over the next couple days or so. I think you could step in theoretically somewhere in this level. I think we have some other macro events that are coming on the horizon with Fed announcements, interest rates, and all those types of things. I think that's going to hurt the broader overall market, but this stock has really sold off over the last few weeks. So a lot of selling has kind of piled into this one. I think if you want to be really safe on this one, I think you could set a stop loss somewhere south of the 52-week low, maybe to make it a clear round number. I think you could set a stop loss here at $140 per share. The reason why I pick out $140 per share on this one is we've got another gap down here closer to about $130 per share. In fact, south of $130 per share. So if we get south of $140 per share, and let's just say this was a temporary fake out, because look, when this stock goes down, it does create little bounces, but in this move that we made back in March, the stock headed down, bounced up, and then really just continued to head down, obviously. Now, the same thing could occur. This could just be a quote dead cat bounce, and this stock could easily start to head lower. That's why I wouldn't be super aggressive at this level. And if you want to be ultra safe, you set a stop loss here at 140. Now, let's assume the opposite, that this stock does bounce. This is a bottoming formation. Buyers start pulling in. The reason why I like this level is the overhead resistance really doesn't come back into play until we get to about $168 per share. So you've got over $18 in upside before this stock would really see, in my opinion, some significant sellers step back in on this stock. You got $18 in upside, and you've got just $9 in downside, depending on where you want to set your stop loss on this one. It's not perfect risk reward. It's not the highest risk reward that I've seen, but it is reasonable, especially when we're talking about the backdrop of this company and the fundamentals of this company. The fact that if it can get back to normal on this Disneyland business, we're talking over $10 billion worth of revenue, and we're talking north of $6 billion worth of operating profits. That would essentially double our segment operating income for a full year over at Disney. I love that from a fundamental perspective. And if things can continue to go in the right direction with the health situation, well, I tell you what, this company is probably as well positioned as any to really capture that upside if and when that day comes. So from a technical perspective, I like this one in the shorter term. I'm not guaranteeing that this isn't a dead cat bounce, but we would like to see this stock in the coming days get above these previous highs that we made here. We really need to get above 155, I would say, in the next couple weeks to really confirm that we're making a low, and we'd like to make another higher low above 155. If you want to be more on the safe side, you can actually wait for that. Wait for the stock to go up another $5 or $6. That will really not necessarily confirm, but it will solidify to a certain degree that yes, we are in now a shorter term uptrend, and you still have upside until you get to about 168. I would absolutely expect, though, when Disney gets back up to this 168 level, to retrace a little bit. Okay, it's going to find heavy overhead resistance since this was a clear level of support. Once it gets broken, it's going to be a clear level of resistance on the way up. On the downside, you're setting a stop loss at about $140 per share, because if you break 140, I think you're coming down to 135, maybe even as low as the 120s on this one. That would be an absolutely smoking hot place to buy this. If we see a deterioration in the stock market due to Fed policy or due to just about anything, I think that can be an excellent buying opportunity for Disney. This one's absolutely on my watch list. This one's absolutely something that I might pull the trigger on. I already have a significant position in Disney, but it's one I want to add to because of the fundamental situation that we talked about. Over $10 billion worth of revenue can come on the door, and we can double our operating profits if things get back to normal over at the happiest place on earth, Disneyland and Disney World. Hopefully you guys enjoyed this video. Be back again soon with more. Good luck with your investments.